Chinese e-commerce giant Alibaba recently posted record sales for its annual Singles Day, topping $74 billion in gross merchandise volume. This performance shows phenomenally strong Chinese consumption as the country moves beyond coronavirus. And this Singles Day sales far outpaced the $38.7 billion Alibaba made last year. So, why did the stock sell off? Well, let's take a look. Sometimes it's not all about earnings. In fact, Alibaba reported earnings growth of 44% on revenue growth of 38%. Both reports smashed expectations. Following the earnings announcement, the stock wobbled a little. It regained its footing, but the next day the shares closed just below $300 per share. Then it got ugly. But before the earnings announcement, I said that Alibaba would likely head lower. My reasoning? The charts, of course. They'll give you an edge. Reading the charts, it looked like the stock was already heading down from a few weeks back. Being that I've been around for a long time and I've been around the block several times, I've seen this before. And the real problem is that others already knew that it's more than just the earnings. What happened was the Chinese Communist Party. The State Administration for Market Regulation has been looking into drafting anti-monopoly or antitrust rules that would target online platforms. And if you remember, Chinese regulators recently halted the Ant Group IPO that had been valued at about $34 billion. Ant Group is controlled by retired Alibaba CEO Jack Ma. Moreover, Alibaba is an Ant Group shareholder. Stock market conditions are different in China. They have a different set of rules than what we would consider normal or open. You may make a ton of money on Chinese stocks, and I hope you do. Just understand the risks are different. So let's take a look at our charts for Alibaba. And we're looking at a 3-year weekly chart on Alibaba Group. The symbol is BA. For disclosure purposes, I don't hold any shares of Alibaba at this time. And definitely you can see from late 2018 a very strong move on the way up. As well, you can even see the cycles up and down, up and down. And in my humble opinion, I just thought I was seeing the top of the market there in mid-late October. And I think the oscillators prove my point. Here in the Mac, you can see I thought the top was at that point there. And definitely you can see the cycles here. So now I don't think that's all bad news. I think that the fast line is going to head down. And I would be watching for a bottom basing pattern, hopefully above the zero line, hopefully above this level here, which was above this level here, which was above that level there. A very nice upward step all the way through to here. Look for another one, and if it does bottom and base in this upper level, then Alibaba may rock and roll. You can see the cycles there in the histogram as well as in the price rate of change. To me, I thought this was the top there in, say, early October, mid-October. Definitely, once you see that, it failed, came on down. You can see the same thing. You don't necessarily know that the top is in, but I thought the probabilities were there. Into the stochastics and then into the Williams. And even in the Williams, you can see definitely the nice pattern, that cycle moving on through here. And I think it was just time for the stock to head on down. And that was helped by the Chinese Communist Party. Back on up here, again, I don't think that all is over for Alibaba. I would just look for a bottom or basing, hopefully above that 50 EMA, but just keep watching it. It's going to take perhaps, such as here, a few months to bottom, here, several months to bottom, here, maybe 2 or 3 months to bottom. So from 2 to, say, 6 months or so, I think it's going to bottom, and I think it's going to be above that 50 EMA. So not all is lost. And for today, that's ChewDog Charts. Thank you.